Welcome to Cross-search. I'm Jodie Papike. This week it was announced that a firm by the name of the Investment Center is selling to LPL. They have been around since 1986 and they have about 240 financial advisors. This comes on the heels of LPL also announcing that they're buying the group of broker-dealers under the Atria network. That deal hasn't closed yet, but we think that that's going to close sometime early next year. So obviously, we've seen a lot of consolidation in the marketplace over the last several years. And there are several reasons why this is happening. The first reason is because a lot of the broker-dealer owners that we see in the marketplace have been in the business for an awful long time. And a lot of them are at retirement age and are trying to figure out the best way to either have a succession plan to keep the business in place, or they're deciding that it's time to cash out. We've also seen an environment where it's very difficult for these types of firms to compete because larger firms that are either public companies or they're now owned by private equity firms are offering a tremendous amount of capital for firms to move over to them. So we've seen the recruiting landscape get more and more difficult for small and mid-sized firms. And several of them that are in the marketplace just are having a very difficult time staying relevant and being able to compete when it's so competitive. It's also a very attractive time for sellers to sell, for their firms to sell, because they're being offered so much capital to sell their business to bigger companies. So there are a lot of reasons that are kind of colliding at the same time and why we've seen so much consolidation. So what does this mean for advisors that are at a firm? They think things are stable, they're happy, they're not thinking about looking around, but all of a sudden they find out that their firm has sold. The first thing that advisors should do is really look at the type of acquisition that is happening for them. The first thing that they want to look at is, what are the changes going to be? Because the first type of acquisition is a buyer comes in and essentially leaves everything alone. Clearing firm stays the same. Back office employees will remain the same. There's essentially zero change happening for their business. Another type of acquisition, though, is what we're seeing with the Investment Center. And that is LPL coming to the table and essentially offering the advisors an opportunity to join them. They don't have to join the firm if they choose to. There will be a lot of change for them, though. They'll be evaluating a new clearing firm, a new technology platform, the culture of the company. It's essentially all the change that you could imagine. The benefit for them is if they choose to go over to LPL, there will be less paperwork in the process, but their business going forward, there will be a lot of change. So what we wanted to talk to advisors today about is that with those types of acquisitions, what you can anticipate to see is the initial phase is going to be offers sent out to advisors. Those offers, if you will, are contingent upon background checks and a deeper dive into that advisor's business to decide for the acquiring firm, is this a good fit for us? Do we want this advisor to come over to us? They're going to be pulling CRDs. They're going to be looking at product mix, specific products that advisors that they sell within their company to decide, is this someone, again, that we want to acquire? I really encourage advisors to take their time with this type of acquisition and do their own due diligence, just as if you were going to make a broker-dealer move on your own. Make sure that the firm that's acquiring you is a good fit for you and know what your options are. If you have any questions on this topic or you want to explore other opportunities, give us a confidential call today. We would love to chat with you.